Are you worried about the impact of tariffs that might be levied on Canada by the US? If you are worried about your wallet or potentially losing a job or any implication that might be brought about by the possibility of also my insights on the trade integration between the US and Canada, but also how these tariffs will specifically affect each province and territories across the Canadian economy, and also share how I am repositioning my trading and investing strategies in the US and Canadian markets. And also backing these analyses by some insights from notable economists like Professor Trevor Tombe from the University of Calgary and also Professor Krugman, who won the Nobel Prize Laureate. And they've done quite extensive work in this space. So now, to get started, those who don't know me, my name is Isaac Jonas. And I'm very fascinated about sharing my thoughts about the stock market, the financial markets, and also what's going on around in the world of economics. And I regularly trade and invest as a retail investor in the US and Canadian markets and share my experiences in books, in articles. I write for quite a number of papers, mostly in Zimbabwe, and mostly focusing on the US and Canadian markets. And this is my book that I wrote about my experiences and how to invest in the financial markets. Now, the first thing is that I think it's important for me to just explain in simple terms what a tariff is. A tariff is basically a tax that is levied on goods or services, right, on imports. So in this case, using the example of the US and Canada, let's take, for example, the US imports oil from Alberta province of Canada. Let's say one barrel costs 100 US dollars, and then the US then levies 25% tariff on that crude oil. It means now one barrel would cost $125, all things equal. I say all things equal because there are some things that can possibly happen. For example, if Canada then in some scenario then retaliate dollar for dollar or even not retaliate, right? And generally tariffs, what happens is that if one country says, okay, we are going to put a tariff on this, and the other then says, okay, we are going to equalize the tariffs, then it can potentially become a trade war. Or in this case, the US might also actually result in a situation where they would not have anticipated. So that might be the possibility. So one way to look at tariffs is to look at them in scenarios. For example, for simplicity, you have a scenario, let's say the 25% tariff is implemented, let's say on February 1st, 2025, President Trump administration actually levies that, and Canada that does not retaliate, right? In that scenario, there might be a range of outcomes, potential outcomes. Now, let's say now Canada retaliates, then that might be a different scenario in that. So I'm going to show you that in a second. Now, the first thing that I will say is that the US is actually the largest trading partner for Canada. And if I look at the data for the trading between these two countries, you can see that, let's say for the past 10 years, I just took this data and created this table from census.gov. It shows that the US has been having a trade deficit, but my research also shows that this is mostly on goods, but if you then consider other services, because there are some American companies that are in Canada, say, for example, Canadians watch Netflix and also use YouTube or Google. And these are American companies that can potentially make revenue out of these interactions. So at the end of the day, those things are beyond the scope of this video because there is what is called as the US-Canada-Mexico Trade Agreement. And this actually includes some provisions that cater for those trade agreements between these three countries. But one thing that is notable on this data is that you can see that the US using this data has been recording trade deficit. In other words, the US has been importing a lot of goods that they are exporting in Canada, right? And this is probably one of the reasons why President Trump has been considering to say, well, maybe in this case, Canada is not doing enough in terms of the border and other issues. So maybe we are going to levy a tax, and there could be other reasons as well. But just to provide you with a simple understanding of tariffs, let's say, these tariffs, there is a blanket tariff for all the imports, right? That goes to the US. In other words, those are the Canadian exports, be it oil, automobile, mostly from Ontario, in the aerospace, uh, uh, products from Quebec that we export to the US. Usually, these might then increase the prices, all things equal. There are a lot of variables. But this might then actually go across different sections of the economy, because an economy has different sectors, even primary, secondary industries, but the impacts might be difficult to actually exactly approximate. But overall, this might increase the cost of production, but also clearly that might mean that our exports, Canadian exports, will be more expensive. And when they are more expensive in the eyes of the Americans, maybe they might then decide to focus on other alternatives domestically, right? But at the end of the day, these things, they can take time. But like I said, I drew this chart, and you can see that this is the trade balance. You can see it has always been negative using this data. And what has been happening is that there are some years that the trade has been going up, and some years they go down. In 2020, I think there was the COVID, but the trade picked up. And at the end of the day, if I draw a line here, it shows that there has been, like, I would say, fairly growing trading relationship between Canada and the US. Therefore, these countries, they are like Siamese twins in a way. Now, how could this be impacted if there is a tariff? Let's say scenario one, Canada does not retaliate. Professor Trevor Tombe from the University of Calgary then, did this research, quick research, and it shows that about 2.4 million people might potentially lose jobs. And what this means is that these are not just numbers, they are people who potentially lose jobs. And in Quebec, you have almost 500,000 people who might lose jobs, and they might be from across different industries. Now, let's say in terms of the industry composition, what could be the impact? You can see here that the US has been mostly the destination for most of the Canadian exports. And you can see that the motor vehicle and parts, they 75% exported to the US. So what this means is that this industry is most likely to be hit hard if there is a tariff on this, right? And should Canada not retaliate. Now, there might be a different scenario now to say, like what the Prime Minister here in Canada, Prime Minister Justin Trudeau, indicated that they are ready to retaliate should that happen. But at the end of the day, tariffs, by their very nature, they may possibly escalate into what are called trade wars. But what this means is that the Canadian GDP might potentially shrink, right? And Professor Krugman actually mentioned that when you are looking at tariffs, one way to look at tariffs is that they can, the impact could be in the region, the square of the rate of the tariff increase. Let's say in this case, it's 25%. What this means is 25 squared could be 625 billion impact on the Canadian economy. And I'm going to let that video from Professor Krugman play so that you can actually see. Let me just stop here so that you can watch it. Okay. So now I think at the end of the day, another way of looking at tariffs is to say, what happens if Canada does not retaliate? I think these are just hypothetical. Maybe this is being used as a negotiating tool by the Trump administration for Canada to then say, well, if these tariffs are levied, then this could be the real impact. 2.4 million people's lives could be on the line. So maybe let's play along and maybe let's also collaborate, which might end up being a good thing in terms of whatever the grievances are. But let's say these tariffs actually happen. In the short term, some, of the impacts could be, as Canadians, we may pay more for goods and services now because this could lead to Canadians possibly buying less, right? And people can also look for alternative if there is, because like I said, this might cause a ripple effect on the prices of those goods and services. Now, significant job loss could be something that could be devastating because when people lose jobs, it might increase stresses, and also research shows that some people might potentially even have financial strain. So that is something that is not so good at all for Canadians. Now, at the end of the day, the Canadian economy will have to find a way. Let's say if they were exporting crude oil from Alberta or automobiles from Ontario, they have to find other export destinations, be it Europe or other parts of the world, and that might take time. And during that time, the economy might contract, like I indicated, but overall, on the long term, if that is managed well, it might be also another opportunity for them to expand to other export markets. And it's difficult to quantify, but at the end of the day, sometimes that might be the reality, right? And hopefully, Canada does not find itself again on that situation where those other countries may also want to levy tariffs, and that cycle could possibly happen again. Now, because the Canadian economy, it has 10 provinces and territories, you see that different provinces have different sectors that are stronger. For example, in BC, we have forestry, mining. So if this sector is affected, it means most people at provincial level in British Columbia here, they might, lose jobs in these sectors. But also, if you look at the maritime, there is, a very strong fisheries industry there. Most people, they would know the Atlantic cod, which was very popular in some years ago, and then the population collapsed. But there's a lot of fishing that goes on, even lobster. The other time that I went to Halifax, that was one of the things that was notable in Halifax in the maritime provinces of Canada. Now, those who are in Quebec, this is something that is real, the possibility of losing jobs. But at the end of the day, I think, I hope this is something that will not happen. Now, how am I repositioning my portfolio as a trader or a retail investor in the US and Canada? I am considering other options actually, because one thing that I've seen is that sometimes when there is uncertainty, sometimes investors might tend to sell off, and then other wonderful companies might be selling their shares, might be trading at a discount. So I'm doing research on some Canadian companies that might be potentially impacted by this. In case maybe if I see a potential upside over the medium to long term, then I might just get in, open some positions and just wait. But also in the US, because now this trade war might, if it happens, practically it might cause the Canadian and US dollar to actually diverge even wider, because now the US dollar has been strengthening even more versus the Canadian loonie. So what this means is that I would need more Canadian dollars to buy the same quantity of US dollars. So in this regard, if I have investments in the US, for example, if I buy US publicly listed companies in US dollar terms and they appreciate and the economy grows even faster, it means I might see more capital gains in that regard, holding other things constant like taxes here in Canada or even in the US. So what that means is that having that exposure across the US and the Canadian economy, and also even globally, because if I buy shares for Tesla or Apple as an example, and this is not an endorsement or investment advice, they have exposure to other countries or other parts of the world. So in a way, it's kind of like diversified in that regard, to say there are factories in China, let's say in Europe, and those sales might be higher in some years than just strictly if it was selling their products or services only for US population or consumers. So these are some of the insights. So the way that I'm looking at this situation is that I think there might be opportunities, but also challenges, in the sense that for Canadians who may lose jobs, this might potentially increase stress, financial stress, like I indicated. But more importantly, these are not just numbers. When people lose jobs, it's not a funny thing. So I hope things do not escalate to that point. I hope you found this video helpful. And if you haven't subscribed, please consider subscribing to my videos so that you can watch more videos, and share your thoughts and how you think these tariffs might impact you or your life or your neighbor, so that we can also learn from each other. I've been seeing a lot of stuff on social media about how people feel and think about this. It might be a reality, and one way to look at it is to actually prepare and just assume that they might be levied. Hence, you should fasten your belt. Now, lastly, I always like to say, trade and invest wisely, and may the markets be on your side. Bye bye for now, and I'll see you in the next video. Thank you.